Good morning, and welcome to episode 28 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, May 26th, 2021. In just a few short months, we are going to celebrate an infamous golden jubilee of sorts. In August 15th of 1971, almost 50 years ago, President Richard Milhous Nixon decided to close the gold window, making it no longer convertible between gold and US dollars, and therefore removing the tethers of accountability that politicians had to balance the budget. And they haven't ever since. As a result, the first president to feel the effects of that, managing a fiscal policy in an environment where there was no accountability, was President Gerald Ford. Show of hands, I can't see them, but how many remember those win buttons, right? Whip inflation now. That came from a speech in October of '74, a year where there was double-digit inflationary pressures. The average inflation in the 70s was about 7%. We also saw double digits in 1979 as well. The program was out there to encourage people to stop spending and start saving and be responsible, even as their government was not. Fast forward 50 years, we have a $28 trillion debt that the company has shackled around its neck. The economy is suffering, the dollar is weak, and inflation is on the rise again. Despite what you'll hear from the Fed and Treasury Secretary Yellen, their goal is to instill confidence, make you feel the economy's strong, the dollar's strong, and there's nothing to see here. Everything is fine. But it's not fine. Some of their comments are just mind-boggling. I've already mentioned in past episodes about Fed Chairman Jerome Powell saying that if inflationary pressures appear, and they're already here, then it's going to be transitory and manageable. Right. You had Janet Yellen, Treasury Secretary, come out, and she basically said that in the morning, in some comments, that interest rates would need to rise in order to combat inflation. And then in the afternoon, I guess after getting talked to, her big oops moment, she came back and said, oh no, there's nothing to see here, no need to raise interest rates. And then just recently we released the Fed Open Market Committee meeting minutes where they said they are going to have to starting to talk about tapering asset purchases. Folks, this is all just here to be smoke and mirrors to, distract you from the reality that inflation is here. We have rising raw material prices. We have an incredible monetary expansion. You will see it. You're already seeing it in consumer prices on the end products. In an inflationary environment, right now, people are considering two options: Bitcoin and gold. Okay, folks, Bitcoin is not your answer. I'm telling you, this is a speculation by definition. We just saw within a day or two a 53% drop from the highs of about $64,000 a Bitcoin. It fell 53%. It's currently sitting at 37% drop at about $38,000, $39,000 a Bitcoin. This is not what a real investment, a stable asset does. It's a speculation. That's all it is. If you want protection against inflation, you have to turn to gold. That is the proven antidote for inflation for 5,000 years, for recorded human history. That is where you need to put your money. And don't look now, but gold is starting to surge. Let's take a look at some of the pricing over the past week. Gold up 2.75% at 1907.20. It's broken through 1850. That's a bias to the high side. It has now cleared $1,900 an ounce. We're within about $14 of the previous bull market's all-time high and looking to go higher. Silver, $28.11 this week versus $27.71 last week. That's a 1.5% increase. Platinum is down $10, $12.04 from $12.14, a 1% drop. Palladium is down to $28.34 from $29.37. That's a 3.5% drop. The US dollar index, 2 weeks now below 90. It tipped above for a second and went even lower. It's actually up now to 89.74 versus 89.93 last week. And silver has a little catching up to do over the past week. It's at 68.08 on the gold-silver ratio. So silver will catch up to gold and outpace it, we believe, but a little bit of pause this week in that activity. So the bottom line, folks, is the markets are moving. If you're looking for a dip, I think you're looking in the wrong direction. Prices are expected to move higher. Put some of that money you have earmarked for gold in it now. I think now is the time to buy well and take advantage of the next leg up in this bull market. As always, we'd like you to subscribe and like our YouTube channel. Leave us any comments below or questions you have so we can cover them on the air. In the description paragraph, you have the opportunity to sign up for our free weekly, twice weekly newsletter alerts, and we have a newsletter once a month information line that'll be coming up the 10th of June, I believe, the second Thursday of the month. So go ahead and subscribe to those, follow us, and please don't ever forget that getting rich starts with keeping what's yours.